Every earnings season, investors ask one simple question: did the company beat expectations? But Wall Street asks a different question: what do these earnings tell us about the economy? This week, two American giants reported earnings: Delta Airlines and PepsiCo. One tells us how people are spending on travel. The other tells us how they're spending on everyday essentials. Together, these two companies provide one of the clearest snapshots of the US consumer. So today, we'll compare their latest earnings, analyze their valuations, discuss the biggest risks, and answer one important question. If you could only buy one stock today, should it be Delta Airlines or PepsiCo? Let's dive in. Delta Airlines analysis. Delta officially kicked off airline earnings season with a strong quarter. The company reported $17.67 billion in revenue, beating Wall Street's estimate of $17.55 billion. Adjusted earnings came in at 1.56 Ds per share, beating analyst expectations of 1.49 by approximately 4.5%. That's an impressive beat for a mature airline business. Management also reaffirmed its full-year earnings guidance and expects strong travel demand to continue through the rest of the year. So, why is Delta performing so well? The answer is simple. Consumers continue prioritizing experiences. Premium travel remains strong. International routes continued growing. Corporate travel also showed steady improvement. Despite concerns about inflation, travelers are still willing to spend on vacations and premium flights. Another major positive is fuel. Compared with previous years, fuel costs have become much more stable, helping improve operating margins. Looking ahead, analysts expect Delta to generate approximately $17.29 billion in revenue next quarter, with earnings of about $2.77 per share. From a valuation perspective, Delta looks attractive. The company has a market capitalization of approximately $57.4 billion. It trades at only 14.8 times earnings and 0.86 times sales. Compared with many large-cap US companies, that's relatively inexpensive. However, investors should remember that airlines remain cyclical businesses. Higher oil prices, economic recessions, or weaker consumer confidence can quickly reduce travel demand. Competition from United, American Airlines, and Southwest also remains intense. So while Delta offers attractive valuation and earnings momentum, it also carries higher economic risk. PepsiCo analysis. Now let's turn to PepsiCo. Unlike Delta, Pepsi doesn't rely on vacations or business travel. People continue buying beverages and snacks regardless of economic conditions. That's why Pepsi has long been considered one of the market's most defensive companies. This quarter, PepsiCo reported $24.88 billion in revenue, comfortably ahead of Wall Street's estimate of $23.95 billion. Adjusted earnings came in at $2.20 per share, slightly beating the consensus estimate of $2.19. The beat wasn't huge, but consistency is exactly what investors expect from Pepsi. Management also maintained its full-year guidance, reinforcing confidence in the business. However, the underlying story is more mixed. North American snack sales remained under pressure as consumers became more price-conscious. Many households are looking for cheaper alternatives and reducing discretionary grocery purchases. On the positive side, Pepsi's international business continues performing well. Global demand remains strong and helps offset slower growth in North America. Pricing power also remains one of Pepsi's biggest competitive advantages. The company has successfully increased prices over recent years, while maintaining healthy profitability. Looking ahead, analysts expect next quarter's revenue to reach approximately $25.01 billion, with earnings of around $2,000 per share. From a valuation perspective, Pepsi trades at approximately 18.1 times earnings and 1.95 times sales. Its market capitalization stands at roughly $187.50 billion, making it one of the world's largest consumer staples companies. Unlike Delta, Pepsi also offers one of the strongest dividend histories in the market, with more than 50 consecutive years of dividend increases. For long-term investors seeking stability and income, that's extremely attractive. Risk. Delta also carries significantly higher risk. Airlines are vulnerable to recessions, oil prices, weather disruptions, labor costs, and geopolitical events. Pepsi's business model is much more predictable. What these earnings tell us about the economy. This is where the story becomes bigger than either company. Delta tells us consumers are still spending money on experiences. Travel demand remains healthy. Premium cabins continue performing well. Pepsi tells us consumers are becoming more selective about everyday purchases. They continue buying food, but they're paying closer attention to prices. Together, these earnings suggest that the U.S. consumer remains resilient, but spending habits are changing. Consumers are prioritizing experiences while becoming more value-conscious in everyday shopping. That's one of the biggest themes Wall Street is watching in 2026. Final verdict. So, which stock would I buy today? If my investment horizon were 12 to 24 months, I would choose Delta Airlines. Why? It offers stronger earnings momentum, a lower valuation, improving travel demand, and greater upside potential if the economy remains healthy. However, if I were investing for the next 10 to 20 years, my choice would be PepsiCo. Its globally recognized brands, predictable cash flow, strong pricing power, and more than 50 years of dividend growth make it one of the highest quality, long-term investments in the market. My winner: PepsiCo for long-term investors, Delta Airlines for investors seeking higher near-term upside. If you enjoyed this comparison, let me know in the comments. Which stock would you buy today? Delta Airlines or PepsiCo? If you want more data-driven investing content focused on the biggest conversations shaping Wall Street, not just individual stock reviews, subscribe to Stock Market Analyst and turn on notifications. Every week, I'll help you understand where the market is heading and identify investment opportunities before they become mainstream. Thanks for watching Stock Market Analyst. Stay informed, invest wisely, keep growing.